Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's February 9th. We've got a couple items on the docket today, so we'll start right with the weekly jobless claims. So last week we had 246,000 people apply for unemployment. This week the forecast was supposed to be at 249,000, and it dropped 34,000, so 12,000 people less had applied for unemployment, which is obviously a good sign because we're starting to see this trend in the 230 range as in 2017. So we're seeing fewer and fewer people in there. And this is also on top of we're starting to see more people who've been sitting on the sideline all these years now getting back into it. So you can see those numbers from the unemployment rate, which we got those job numbers last week. That went from 4.7 to 4.8 on the unemployment number. That's the reason why that went up, because more people who weren't in the market now are getting back into the labor market. And then the U6 number, which is kind of calculates, it's really more of a true sense of the unemployment rate number, gives us a better gauge as to those who are eligible to work, either working part-time or not working. They're eligible to work that may not be working. So that went up as well. So this is obviously a good sign here that we're getting fewer and fewer people applying for unemployment, because it wasn't that long ago we had over 300 people applying every single week, and now we're down to about the 230 range. So it's been kind of chipping away there. Wholesale inventories for the month of November, we had a 1% increase. They've been stocking up about 1%. And then for the month of December, same trajectory at 1%, went up 1% in December. So this is obviously a good sign, because we're wholesalers are seeing that this is picking up, so they're stocking up a little bit more for resale. That's obviously a good sign here. Right now, the stock market is up. It's taking its cue really from the oil, and then also some comments by Fed Bullard. So yesterday, oil prices went down because they found that the U.S. had produced more than they initially thought. So the stockpile is up, so oil prices went down. That's why the stock market started off down yesterday. But today, oil prices went up, so stock market is taking its cue from that. They do got a few mixed earnings today. You had somebody like Twitter who missed their earnings reports, came up shy. So you got some mixed ones out there with other corporations giving theirs out as well. Comments by Fed Bullard. He's a Fed member out of St. Louis, and basically he didn't think the economy is going to be overheated this year, at least for 2017. He thinks it's still premature. Everything to be, he thinks it's going to take time for the economy to pick up. Also, he kind of made comments about he thinks the rates could be down a little bit as a result. He doesn't see pressure from inflation as of yet, and so that's kind of making the market a little bit more happy as well. So let's take a look here at the bond market, and we had a nice day yesterday. It was kind of a weird day. That's why I said that the price change right there. It wasn't for the better. After being up quite a bit of the day yesterday, when they had a poor sale auction for the 10-year treasuries, it went down. So we were up like about 30 basis points or so at one point, and it dropped down to about 16 or 12. So it lost about half of its value, and late in the day it just kind of rallied back again. Now today we're down about 28 basis points as a result, and then also today we got a 30-year, about $15 billion, I believe it is. They're going to be the Treasury's going to be selling the 30-year notes. So if we get a poor auction on that one as well, which I wouldn't be surprised, we could see this drop a little bit further as well. So just be a little bit cautious here today. You may want to kind of look into putting that finger on the lock if you're looking to refinance or purchasing and haven't locked your interest rate yet. You might want to consider that soon. But we're still above the 50-day moving average here, so we got that's now becoming our floor of support, which is good. So we're in between the first level, which is our floor here, and we got our first resistance level. So we're still within that range here. But again, we just want to make sure we're not getting a reverse in trend here and start seeing this downward trend here. So we just want to just be a little bit more cautious here. And again, later today we got the Treasury, which that could bode not so well for bonds here, and could have a little bit more of a sell-off. So just be a little bit more cautious. that kind of concludes. So today, obviously, pricing worsened for interest rates compared to yesterday. If you are looking to get more information throughout the day, just stop over at Twitter. You can find me, Mike Bjork, on Twitter, and you'll see me posting throughout the day more events that pop up throughout the day. All right, you guys have a great day. Thanks so much for watching, and then I'll see you guys tomorrow. Bye-bye.